Hello, everyone, and welcome to the second show of BIGtoken's monthly Bitcoin show, where every month we pick a different topic, Bitcoin related, and get a couple guests, get a couple experts here to talk about the topic. And so this month, excited to be joined first by my co-host on the show, my friend Jay Gould. Jay, welcome.
How you doing? Good to see you guys.
Back. And we've got two great guests today, starting with American Hodl, or I guess Hodl for short. So welcome, Hodl.
Hey guys, happy to be here.
And where are you calling in from today?
I'm in Las Vegas.
Okay, cool.
Yep.
Do you play much?
It's always a mistake when I do. Always.
You recently did go, didn't you?
I dropped 10 grand a couple like about a month ago, and I was like, this is a good reminder why I don't play that much.
0.2 Bitcoin.
And we're also joined by Jeff Ramson, who actually just recently published an article about why more smaller companies aren't putting Bitcoin in their treasury. So welcome, Jeff, with PCG Advisory.
Thanks, guys. Great to be here. Thank you.
I'll give you a quick moment to explain to folks what PCG Advisory is.
Sure. Okay, thank you. So PCG Advisory is an investor relations firm, and we specialize in consulting and providing services to microcap public companies. To me, this topic is extremely interesting because I think that and we'll talk about it, of course, throughout the show. But I think it's a topic that many of these companies should be paying attention to. But yeah, we provide investor awareness and communication strategies for emerging public companies.
And so great. And actually, my company BIGtoken is a happy partner of PCG Advisory. So thanks for all the good work that you're doing for us, Jeff.
Of course.
And, we're going to start off, talking about somebody who actually, I'm a big fan of. And Hodl, start with you about what you think about our friend at Michael Saylor at MicroStrategy, who I think, to some degree, kind of kicked off this whole Bitcoin Treasury thing.
Oh, totally. It's interesting. I had anticipated a lot of institutional demand for Bitcoin. I think a lot of us did going into this year. But the corporate treasury thing fully took us by surprise. And I think it has been a result of, just how charismatic, charming, effective, intelligent Michael Saylor himself is, how quickly he got up to speed. He's been open sourcing his playbook for other corporations. COVID acted as this sort of great accelerant to make him realize that he was sitting on this $500 million melting ice cube, as he calls it. And his like evangelism on the corporate side has been, just amazing. I've heard Michael talk about, back in 2012, he wrote a book called The Mobile Wave. And in the book, he basically outlined, that you should be buying the FANG stocks, and they were going to be acting, as a sort of a store of value going forward. And if you would have listened to him in 2012, you would have 10x your money. And one of his regrets was that he didn't load up on the corporate side. He only loaded up on the personal side. And so I think, this play right here, right now, is him correcting that, and also trying to get Bitcoin on the world's balance sheets, not just on MicroStrategy's balance sheets.
Yeah, and Jeff, you followed Michael much?
Yeah, I have. Well, certainly since he started buying Bitcoin. Frankly, I wasn't really paying too much attention prior to that. But yeah, I think what he did was obviously very bold, very visionary, and I give him a ton of credit. I do have some opinions about how this may apply to other companies, but I think what he's done is fascinating. And I agree. I mean, I think having someone out there that can articulate in a business sense, what companies can be doing with Bitcoin is fabulous. And I think he's done an amazing job. I think also the fact that, he was very open about it and then started sharing that and offering his knowledge to others, I thought was really commendable.
And
quick question for you on the chart you're showing.
Yeah.
Percentage BTC, is that of the market cap, or what is that number representing?
Yeah, I think that's of the total. I think that's of their what is in their treasury.
Okay, got it. That makes sense.
Although that
so 92% of his treasury is Bitcoin.
I'm sorry,
right?
the percentage. So like MicroStrategy has a $5 billion market cap, and it's holding 4.6 billion of BTC.
Oh, so it is of the market cap. So yeah, the majority of the company is Bitcoin, right?
Yeah, as you can see, and Tesla's, I guess, by a wide margin, the second biggest. Although, that's a good topic for the moment. What do you think of what Elon
Elon.
did yesterday?
I don't think it's Elon, and it's not exactly a popular decision or sorry, opinion. It's not very consistent. Like, I mean, you would know, you're a CEO of a public company. If you go out to your shareholders, Lou, and as a fiduciary of the shareholders, you decide that you want to purchase Bitcoin, and you go to your board and everybody approves it, investment committee, and you guys do that. And then a month later, you say, you know what? On second thought, we don't like how it's impacting the environment. You didn't do the diligence on that initially. It seems like there might have been some pushback from some shareholders, maybe, and they're responding to shareholder pushback. That's what I think, but I don't think that's an Elon decision. I think it's a collective. It's a company, right? You have a lot of constituents within the company. So why didn't they have that conversation initially?
I would agree with Jay to large extent. I think there's a lot of things. It's sort of like, I view it as like a 4D chess move from Elon. I think there's a lot of things in that tweet. I think that tweet was worded very carefully. If you look at the wording, he was facing sort of an outrage mob from his SNL appearance. People have had a lot of divisive things to say about him over his opinions on COVID, the fact that he is the world's richest man, et cetera, right? And so, I think there were a lot of concerns around, there's a lot of ESG concerns in general around Bitcoin, and that's maybe something we should talk about for corporate treasury. And so I think this was sort of Elon throwing a bone to the people who may have problems with Bitcoin from an energy usage standpoint. He's also sacrificing nothing. You know what I mean? It's kind of like a pawn sacrifice, in the sense that nobody was actually going to buy a Tesla using their Bitcoin, because if you're the type of person who holds Bitcoin and believes in Bitcoin, you believe that Bitcoin is going to $1 million+. And so why would you want to buy a depreciating asset with that, right? At the same time, he talks about, how Bitcoin mining, proof of work mining, is not necessarily green, but that it can be green. And to me, this kind of signals Elon might be setting up a problem that he is the solution for. Is he going to come in with a gigafactory and the power walls and the whole thing and announce Tesla mining ventures? I don't know. We'll see. But I thought that, he didn't divest on his corporate treasury, which I think is the most important part. Like, don't tell me what you think, show me what's on your balance sheet, and I'll tell you what you really think, right?
Right. And voting with your dollars. Hodl also, what I thought was kind of interesting is he copy and pasted a screenshot of a message that was clearly sent to him from somebody else. And as we all know, last year when he came out and he says, our stock's overvalued, this is ridiculous, or whatever his tweet was, and the SEC didn't like that, which I thought was interesting. He was trying to protect shareholders. And then he said, fine, if everybody agrees with that, I'll sell $5 billion of this shit. And so he goes and sells it and takes $1.5 billion and buys Bitcoin with it, and then doesn't sell it. He sends a lot of mixed signals. That's a typical Elon thing, right? He's not, I wouldn't say he's not being transparent, but he just kind of, he does whatever he wants, right? But in this case, I think his tweets are monitored, as I understand it, where they're cleared by compliance or something. So that one was clearly a copy and paste. You could see it was an image of somebody else that wrote it. It's weird.
Yeah, and by the way, I mean, if you have the ability to move the markets, you will move the markets. I mean, we've seen a lot of public commentary like this. So if they are, it'd be interesting to see if they make another corporate treasury buy on this dip. We'll see.
Yeah, if I could just add to that, I agree. One, I think that my own cynical view of it is, I think that he is setting things up for Tesla to become a solution for this issue. And then, right, he didn't divest of any of the holdings. He just said he wasn't going to take it for payments, which again is right. It's not a big sacrifice. It's more of a, it's just more of an image related or PR piece at the moment. But I think it's, I think he's still very, very committed to Bitcoin. And I think that, I think Tesla will come up with something very clever here.
I think that's good points by all. The watching what he does instead of what he talks about is generally a good strategy. A big question is, we see, even though we have this list of different publicly traded companies that have it in their treasury, it's still a very small number. Still, far less than 1% of all the publicly traded companies hold in their treasury. What do you guys think is the biggest thing holding back more treasuries from investing in Bitcoin, at least putting some of their treasury in Bitcoin?
Do you mind if can I jump in now?
Jeff.
I think there's a couple of things. One, I think that most public companies are when it comes to corporate governance are afraid of taking risk, afraid of being an innovator, it takes a lot of a nerve to be Michael Saylor or, of course, Elon Musk. A lot of the companies that are on this list are crypto related companies, so it makes sense. But if you're not a crypto related company, it would take a lot to get a board to approve something like that for a variety of reasons. One, obviously, there's reputational risk, there's potential economic risk. A lot of people don't know how to manage Bitcoin still at this stage. There are people who don't know how to buy Bitcoin, frankly, and maybe not for their company or the corporate treasury. And I think there's also accounting issues, right? I don't think there's the way it's treated right now, it's not very favorable to the companies. And for smaller companies in particular, it could have a bigger impact on their, if it's not handled properly, it could have a bigger impact on them financially than certainly like a Tesla. So I think overall there's fear of those types of things. And I'm happy to elaborate on some of those details about the accounting part, but I think I think that's where the fear comes from.
So I was on a Clubhouse. I was in Clubhouse last night, and John Legere, the former T-Mobile CEO, was on stage with me. And somebody said, "I don't think it makes any sense. I agree with Elon." And John's like, "Yeah, I don't think it makes a lot of sense to have Bitcoin in the treasury either. It's like we didn't do anything like that at T-Mobile and other companies that I've been, in charge of." And I said, "John, can I challenge you on this for a second?" I said, I mean, you have all this cash that, as Michael Saylor says, it's a melting ice cube, right? It literally losing buying power. If you're losing 2 to 3% a year to inflation, in 10 years, you lose 30% of the cash that sits on the balance sheet. He goes, "Well, to be honest with you, at T-Mobile, we spent every dollar we could and borrowed." He's like, "So we didn't have a cash problem." I said, "Yeah, but high growth technology companies do." He's like, "That's a fair point." I said, and he's like, and I said, "Hold on. What if you had 1 to 5%? Let's just say it's 5%. Are you going to miss the 5%? You're not going to miss the 5%. You're losing 2 to 4% a year, 2 to 3% a year anyway to inflation, right?" And he says, "It's a really good point." I said, "So if you had a plan, I'm going to buy 5% over the next 5 years, and you start to lay in with a dollar cost average on it. If there's volatility in it, you benefit to the downside, right? You don't benefit to the upside, but you're being cautious about it. And as we've seen the history of Bitcoin, which is growing 200% a year CAGR over the last 10 years, even if it does half of that, it's 100% CAGR. Doesn't it make sense that all of a sudden I flipped him? He's like, "Yeah, I think it totally makes sense if you had a lot of cash in the balance sheet." He goes, "At T-Mobile, we didn't have that problem. We were struggling with cash in the balance sheet." So he's saying there's different companies, is my point here, that some companies, I think it makes more sense maybe to have Bitcoin, but from other just companies like a GE or something, maybe it doesn't make more sense for them. But it certainly makes sense for technology companies, high growth, cash flow positive, has tons of cash on the balance sheet. I'm not sure why they're not thinking about it.
I think if I could just add to that, I think that I think that there's a key point in there, which is it's got to be done with a plan that makes sense relative to the size of your company and, again, your cash needs, and so it's not like a one size fits all approach. But again, I think a rational, even a small amount for a company. Obviously, we'll talk about what that means when it adds up for many companies, but essentially, I think it would be remiss for companies not to be at least learning more about it, getting educated on the process, and considering it as part of a strategy, for sure. And yeah, it won't fit for everyone.
And Jeff, when you wrote the article, what was the response to it? And have you had talked to many of the CEOs that you work with about it?
Yeah, so we actually haven't put it out yet. We're going to put it out shortly, but we're going to update a few things. Sorry for that, but I have talked to CEOs about it, and we get the response is many are intrigued but nervous, and I think that they don't understand it. They don't understand how to do it. They don't understand the potential risks and things of that nature. Also, we deal with a lot of what we call microcap companies, which are companies that are continually, they're in development, they're continually in capital raise mode. So it's not like they have a whole lot of cash just sitting around. So in particular, they're extremely nervous about any kind of risk or anything that's outside the norm. They're very nervous. But I do think that they're opening their eyes to it, and I think that it's just a matter of time.
And when you think about how probably few of them, I assume all of us here on the call, have seen the crypto light, and we have an appreciation for what Bitcoin is. And probably it's a small percentage of the population that really understands and appreciate what Bitcoin is. Do you think that education, what Michael Saylor is doing, trying to help people understand, do you think he's having an impact, or others are having an impact, or?
I think he's had a huge impact. the thing about Michael Saylor is that he's so bullish. He's such a maximalist that I think some people actually, it's almost discrediting to some of the points he makes that are valid points. I'll give an example. The other day, he had a great video clip that was edited. Somebody put this like compilation of some video clips of interviews he's done. And I sent it over to my father. It was just, because I'm trying to orange pill my parents, right? Which, by the way, I had a limit order. They got it. Thank you, Elon. They got their limit order yesterday. So, you get these volatility dips, right? 17% one day. I was like, Dad, you're never going to get that. Boom, he got it. And I was like, okay, what do I know? Right. But he said something in an interview where he's like, you should mortgage the hell out of your house and all the cash. And it's like, and to the average person, that sounds very aggressive, but he has such conviction and understanding of Bitcoin. But I don't think you should talk about that with people that are new to it, because I think they think we're crackpots if you say things like that, right? He's literally doing that with his company, and the majority of the value of his business, as you just identified, is in Bitcoin. So of course he's saying that. He's had the benefit of seeing it go parabolic while he's bought it over the last year. But for the average person, they're seeing this volatility and they're saying, oh my God, that's irresponsible, at least in terms of traditional investing ways.
I think for many of us who've been in the space for a while, you start off, you dip your toe in, you have a small allocation, 1 to 5%. And over time, even if you don't touch that allocation or continue to add to it, that allocation grows. And suddenly you're looking at it's 60, 70, 80% of your portfolio in some case, if you've been here long enough, right? And so I think over time, your conviction in this grows and you sort of realize this is inevitable. This is sort of the internet of value. And I really want to, have a piece of that. But to get there, it's a very multidisciplinary thing. You have to know history. You have to know history of money. You have to know history of distributed systems. You have to have a pretty decent macroeconomic outlook and understanding of, the current market environments. It's really tough. Like essentially, it's like rocket science for a lot of people. So it does take I think Michael Saylor said it took him 40 or 50 hours to get educated and up to speed on this. Let's not forget that the man is literally a rocket scientist who went to MIT. So maybe let's double that for the average person, 80 hours or so. I think that's what it takes to get to fully grok the Bitcoin proposition,
You've said it best about him. We did an interview on my podcast, Hodl was on, and I was like, well, who do you think's the most influential person? It's one of my questions in Bitcoin today. I think of Michael Saylor, and he says, well, he's the rookie of the year.
Yeah, it is.
That's a great one. That's a good line.
If we think about education being important, and what do you guys do when you're trying to help somebody, understand what Bitcoin is, or at least get excited enough to take the time, whether it's 40 or 50 hours or 100 hours, to really understand it?
Personally, I point them to videos of Michael Saylor, to be honest with you. Occasionally he gets a little aggressive though, and it kind of discredits it, is my point. But there's that. I think Jason Williams, a friend of ours, wrote a really good book, Bitcoin, Hard Money You Can't F With. I'm not going to say that on here. So I think, great book. It gives the history of money, the history of Bitcoin, intertwined with his personal stories with him and Pomp. And I think that's a great first read for people, actually. Bitcoin Standards, obviously a good book. And there's a lot of other books we can cite, but I think that one is a very easy read and it makes a lot of sense to people because it explains the history of money.
Yeah, for me, I always try and meet people where they're at. I try and think what type of person is this? How much capital may they have to allocate? How might Bitcoin improve their life? And then I try and speak to them from that vantage point. I think a good tool to get the historical context of Bitcoin is to read the Bitcoin Standard, which is a book that's basically about the history of money, and only the very last chapter or two are actually about Bitcoin. So you get a good primer there. It's a pretty easy read. I think a lot of us have read that book. On the corporate side, I think that's by Safety and Amoose. The Bitcoin Standard by Safety and Safety is a Lebanese Austrian economist, which is that's a weird, it's almost like jumbo shrimp or something. But it's a phenomenal book, and it really I had a deep sense about Bitcoin before I read that book, and then once I read it, it gave me the historical context for it. I think from the corporate side, there, Michael Saylor did a web series that was, Bitcoin for corporations. And there's 1 hour in particular where he talks to Ross Stevens from NYDIG. You can get this on YouTube if you just type in Ross Stevens and Michael Saylor. And it is probably the most phenomenal hour I've ever seen in the history of Bitcoin content, just incredibly concise. Ross Stevens is like a virtuoso. I mean, the guy just really gets it. And you'd be hard pressed to show that to anybody and have them not just go, oh man, there's something really big happening here and I need to get involved.
Wow. And that's only an hour. I just try to get people excited enough to just to have them want to learn about it and spend a little bit of time. I copy and paste the 50 most influential bloggers about crypto on Medium. They have a list. And I say, hey, if you follow all of these people every day, you'll get an email from Medium with the stories that they've written or other stories like those, and find some people that speak to you. And start learning. And you'll read an article, you won't understand most of it, but if you take the time to try and understand a little bit in each of the articles you read every day, you'll understand a little bit more. But that's a lot to ask of people. I know Jeff would have, if you had any success in helping people see the crypto light.
Yeah, definitely. In terms of breaking through barriers and getting people to start to at least be open to the conversation. Yes, I mean, look, like most of the people that I deal with, their initial reactions based on what we saw in 2018 and 2019. Obviously we're skeptical and have a trepidation from the corporate side, but that's obviously changed for a variety of reasons. What's happened in the last 12, 15 months. I think the amount of what's really what I see, what's getting people most interested is seeing the bigger names getting involved and opening up their, the possibilities of working in crypto, right? So, Fidelity, BlackRock, you all, Bank of New York, all the names that are out there. Goldman Sachs, I think, just started a trading desk. So, getting these established names into the mainstream is opening up the conversation, and now people are very curious. And I'm getting a lot of inquiry, a lot of questions. And I point them to the guys just mentioned. There's some fascinating material on the web, but I go to Medium and point to those influencers as well, and you included, Lou, for sure. But that's I think right now everyone's curious, all ages. Not that I need to educate young people. I learn more from young people than I do from my contemporaries. But people of all ages are right now fascinated and want to learn more. So I just lost
your volume's not working.
We've been talking about bulls here, but obviously there are some people who are quite influential who aren't so bullish. How much damage do you think that Buffett and Munger, for example, highly respected, Jeff, I'll start with you. Do you think that they're doing much damage?
No, I think quite the opposite. I think that look, as much as I respect them for what they've done in their long lives, I mean, they're brilliant people, but they're irrelevant to this conversation, frankly. And I think that again, Warren Buffett, you can't argue with his success, but I don't think he's ever done well investing in technology companies or technology at earlier stages, right? He's not an early adopter of things. But no, I mean, some of their language,
admittedly too, Jeff.
Right, admittedly, exactly. And so he's really not him and Charlie Munger certainly are not really the people that I go to for their, for how to look at Bitcoin. Right? It's new. It's generational change that, you have to really be open-minded to. And I don't think that they should. Look, you're 90 something years old. I don't know that that's the time to be evaluating something like this. No, so I think they're having a different kind of impact. I think that most people are looking at that as like the cranky old men, excuse me, and no negative impact at all.
Michael Saylor had a great comment the other day. He was on one of the podcasts or TV. I don't know where it was, but I saw it on YouTube. And they asked him about what Charlie Munger had recently said the other day.
Yeah. And
he looks at the girl. She was a young girl. He goes, he could be your great grandfather. How old are you? He's like, do you ask your great grandfather about what technology companies you should be investing in, like Facebook or Google? He's like, which, by the way, he's never invested in any of them. So they discredited themselves.
It's true. And I think, we all have a great deal of respect for Warren and Charlie, obviously, 100%. And what they were able to accomplish. And, I tend to be a value guy myself. That's my mindset and my investment thesis, but value kind of is dead and it hasn't worked in quite a while. And, the Ben Graham school of investing, it's not a thing anymore. Right. And hopefully it will be in the future, maybe on a Bitcoin standard, but the transition to the digital age, these guys came from a totally analog world, and the transition to the digital age is really much more about understanding, network effects, exponential growth, et cetera. And so, you don't want to be taking advice from Warren and Charlie on this one. You know what I mean? Peanut brittle, maybe, those are the guys to go.
I don't think they understand the exponential component. That's the biggest issue. They've missed it many times on many businesses that they have not invested in. And this is something that Lou and I, and obviously you, Hodl, can fully understand and appreciate. Lou and I built network effect businesses. these guys don't understand it. Once you get that flywheel going, man, like it doesn't stop, right? Look, Facebook has proven to us. I mean, they have like 2.8 billion people using their products. It's a perpetual growth engine that doesn't stop.
Right.
And this is a monetary network effect.
Great.
So, we're going to ask a couple more questions, and then we're going to take questions from the audience. So if anybody in the audience has a question, you can put it into the chat. And if we pick your question, we will open up, bring you up on stage, and you can ask the question yourself and engage in a dialogue. It's a casual show here. What do you think the risks are if you are, the CFO or the CEO of a company, and you say, let's put 5 or 10% in Bitcoin, and then Bitcoin goes down 50% like it has, on 7 or 8, occasions. Do you think that there is a career risk to doing that?
If you don't mind, I'll answer that one first. I really don't think so. I think, well, I mean, again, everything depends on certain circumstances, but I would say that, if a company, you first have to evaluate, what you have and what you need. And, I don't think the economic impact would be that great for a company if they did that. I think it could become an issue if there's a regulatory, change or something like that. But no, I don't think it's a career risk at this stage. If it's in that modest percentage, of let's say 5 or 10%, I don't think so. No, but beyond that, it might get a little bit.
And
heavy.
Jeff, like what I said earlier, if you feel there's a career risk and you were an executive or a board member, why not just have a dollar cost average plan so that you look smart otherwise, if you did a lump sum, you look dumb, right? Oh, drop 50%. If it's dropping, you're like, see, we weren't really sure and we're making money. We're getting more coins on the way down. I mean, I think it makes you look smarter.
Exactly.
I think a lot.
Yeah, I'm sorry.
Go ahead, Jeff.
No,
I was just gonna say, I think a lot of the career risk has been mitigated by guys like Stanley Druckenmiller, or Larry Fink or Paul Tudor Jones. I mean, when I read Paul Tudor Jones, the Great Monetary Inflation paper, in which he calls Bitcoin the fastest horse in the race, you could show that to basically anybody and say, look, it's not just me. I mean, there are a lot of people that agree with me, and this is becoming a consensus trade, and we want to be a part of it, and we just want to make sure that we have our position sized appropriately, because risk is pretty much always just a sizing issue.
Exactly.
Yeah, makes sense. So here's the last question, then we can open it up to questions from the audience if we have it. But if you had 1 minute to talk to a CFO, CEO of one of these publicly traded companies, and we're trying to make the case for why they should invest 1 to 5% or whatever it is that you might say, what would you say, Hodl?
I would say, Bitcoin is the internet of value. It has won. Once it breached 100 billion market cap, I think it entrenched itself as the default monetary network. And this thing is not going away. This is not a fad. It was the best performing asset class of the last decade. I expect it personally to be the best performing asset class of this decade. And I think that at this point, it's actually irresponsible to not have a small allocation in your corporate treasury, just as a hedge. And if you have precious metals in your portfolio as a hedge, Bitcoin should probably eat into some portion of that market, because if you've looked at them, they're not performing very well recently.
Jeff?
Yeah, so I mean, those are great points. I would say that as a public company executive, if that's who we're addressing, I would say that by not being involved in Bitcoin, I think you're showing a little bit of lack of vision. And again, I'm not saying that everyone should go out and buy Bitcoin today, but I think you have to be aware of and be educated in the space. But I do think that we're in a digital age. I think it is the internet of value, as Hodl said. And I think that you'd be remiss in not being fully aware of all the tools available to a corporate treasurer. I do think that at some point in time, whether it's Bitcoin, obviously, or other cryptocurrencies, companies need to be agile and able to operate in that space, right? Whether it be with their vendors or their customers. So I just think it's important to be fully up to speed.
Yeah, it's interesting. You both touched on, that there's, that it's irresponsible not to hold. Maybe there's career risk in actually not
Exactly.
If you're not long Bitcoin, you're short.
You're short. Exactly. That's exactly right.
So is that the right response for the best performing asset class for the last decade, to be short that asset?
Right.
Yeah, I think that's a good way of thinking about it. Well, look, this has been great. Open it up. Make one last call if anybody from the audience wants to chime in here with a question. Put it into the chat, and we can bring you up on stage. But if not, I'll let each of you kind of get your if there's anything else that you want to communicate to folks who are reading this, folks who are going to be watching this on the replay. About Bitcoin and Bitcoin in the Treasury.
I got one thing I'm reading here. This little meme I saw today: $10,000 saved in your bank account in 2001 is worth $6,400 in 2021. $10,000 invested in 2001, obviously not Bitcoin, right? The S&P would be worth $67,000. Inflation is the problem.
Right.
Yeah, it was funny if you saw that. Forgot some senior person in the Treasury in Britain. Said about the high risks of Bitcoin, and somebody put out that showed that the pound has lost 99% of its value over the last 100 years or something. 200
exactly.
Years.
Can't sit in cash.
Exactly.
Yeah, I mean, cash is trash, right? Like I think that we know that they are going to continue to print. COVID was just an accelerant for that. I mean, if you pay attention to the markets, the repo markets were failing in September of last year before anybody ever even heard the word COVID uttered. And every time they print, we're going to get less growth for it, and your money is going to be devalued. So, you need to pile into hard assets, things that are scarce. And Bitcoin is pretty much the scarcest thing on the planet. So, you might want to get yourself, listen, we're in a game of musical chairs here, and the music is slowing. And at some point it might stop. And if it might stop, you don't want to be left without a chair,
Yeah, exactly. I mean, the inflation yesterday, that was the biggest inflation number in like 20 years.
Yeah.
1981. Yeah.
Highest Google search ever for inflation also yesterday.
Oh, wow.
Amazing. Yeah. So people are waking up to this fact,
Yeah, and it's crazy because they've been saying there's no inflation, but we've seen the price of all of these things, going way up.
Lumber.
Mm-hmm.
That's right.
Lumber, like plywood's off the charts right now. It's like $100 a sheet or something. It's
yeah,
crazy.
It's gone up 4x. So building a house
Incredible.
becomes dramatically more expensive. Well, look, I appreciate thanks everybody for joining us today. We did get just one question about the spreadsheet that we had up earlier. You can actually go see that spreadsheet yourself. It's a great website, bitcointreasuries.org. And you can watch, in real time, all the numbers adjust. And it's a great way to track, what treasuries are getting involved in Bitcoin. It's a low number today, but my guess is over time, it's going to be a growing list, because it's you're irresponsible if you're a treasurer and you're not adding.
Exactly.
I mean, it's crazy. Yeah.
Okay, well, thanks guys, and thanks for everybody in the audience. We'll see you next month.
Thanks very much, guys.
Thanks for having me.
Okay.
Bye.